Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with Darren Gordon of Centaurus Metals. Mr. Gordon is a chartered accountant with 25 years experience in the mining industry as a senior finance officer and resource executive. Darren has had extensive involvement in the financing resource projects from both a debt and equity perspective and has over 12 years experience operating in Brazil. This has given him an understanding of the regulatory framework and process and general operating environment required to develop a mining project in that country. Darren, thank you for your time, and thank you also for your efforts and your work on behalf of shareholders such as myself and for the viewers of this channel.
Very good. Nice to be here, Steve.
Yeah, glad to have you. Go ahead and start off by telling us your story, how you got involved in mining and how that led to the project down in Brazil.
Yeah, look, that's going back a fair while now, but started out life as a chartered accountant. A lot of my clients at that point in time were mining, resource, junior exploration type companies. And there was like a natural transition that when you stepped away from that, sort of got into a CFO role in a junior exploration company called Jaguar Metals. Stayed there for 9 years, sort of saw a very big iron ore project through to completion of a fairly decent study, and this is asset in Western Australia. And then sort of picked up on an opportunity to get into Centaurus Metals at that point in time as a CEO and then managing director. So been sort of in this role now since 2009. Pretty much that whole time has been in Brazil, and initially focused on some iron ore projects in Brazil. Still have those, sort of sitting in the background waiting for the right opportunity there. But this, picked up this really good asset from Vale about 4 years ago, the Jaguar Nickel Sulfide Project that we've done all the work on in recent times, and that's sort of been the mainstay. And it's a fantastic opportunity for the company.
Yeah. Okay, give us the basics, the financials, market cap, debt, cash, and enterprise value.
Yeah, so look, I think we're sitting at about 225 million Australian dollars at the moment. Cash is about 25 million. So we're sort of reasonably well funded through to the things that we need to do, and we can obviously dive into that in a bit more detail. No debt, sitting there, with supportive shareholder base. So yeah, look, it's really about now taking the Jaguar project, trying to close the gap between where our price is and where we see the value for that.
Yeah, okay, so in USD that'd be 150 mil.
Yeah, about 150 mil, yep.
16 mil cash, so
yep.
Enterprise 134, we'll
yep.
say. Okay, somewhere around there. Okay.
That's all right, I'll try to do all the conversions in.
I'm trying to do it in my head. I've got like a flow chart going on in my mind here. Okay, so your track record, how does this project relate to your experience that you've had before?
Yeah, so look, I guess when I made that transition, I got involved with a small gold mining company at that point in time, and it was a project that we bought. We did all the work to prove it all up. We took it into production, built a small little gold plant, ran it for about 4 or 5 years, and then sort of with the gold price at that point in time, it sort of just came to a natural end. I guess subsequent to that, we've sort of been working on quite extensive iron ore projects, going through the whole motions of feasibility. So I'm talking sort of multi-billion-dollar type build projects. That was one that I didn't stay around and actually go through the build process with, but sort of took it all the way through to getting it funded, finding a Chinese partner to enable that project to go ahead, and that project is now built in Western Australia today. And I guess then in more recent times, as we've gone into Brazil, it's really been about this phase of work that's gone from exploration, proving it all up, getting it all the licenses in place. We did that for the iron ore project, and we're doing that now for the nickel project. And we've made a really good, I guess, headway on that. This time it's all about trying to make sure we capture the market at the right point in time. We think we've got that with this asset. We can talk more through the cost structures, but because we will be low cost, we are very confident that this project will be in the market at all points in the cycle once operational.
Yeah.
And so now the big piece of the puzzle is about trying to put the team together to actually go off and build the project. That requires funding, so that's really the next phase of work for us, is bringing in a project partner or an off-taker that can actually come with us, provide the funding, not really looking to avoid going to capital markets on the equity side, and just really try to avoid all of that dilution. You know, you're a shareholder, I'm a shareholder. You know, we want to try to minimise that as best we can, and right now there's this quite a significant gap between value and price, and we just don't want to be issuing shares at these levels.
Yeah, yeah. What tell us about your team that you've built, and how is their experience related to this task?
Yeah, look, there's a core group of people that have been with us since 2010. Some of those are in Brazil, some of those are in Australia. So, you know, we've got a Brazilian asset. All of our assets have been in Brazil. That's where our focus is. Got very strong experience there, but we're ASX listed. So, you know, you've still got to have teams in both locations. We've been building out the engineering component of that. Some of that's in Australia. As we move forward, some of that will extend into Brazil. But I think, you know, the core key management personnel that we've got in place, most of those guys have been with us for over 10 years. So geological side of it covered, approvals, got that covered, engineering, you know, we've got our ops manager in place, and now we're building out the sort of, I guess, the project director type roles to enable the build to actually take place. Okay,
okay. And let's take a step back here and give us the base case for nickel right now. Nickel, I see as one of the reasons I'm so excited about it is I feel like nickel right now is like uranium was about 2.5 years ago. When I talk about it, people, I haven't gotten actual hate mail, but in the comments of my YouTube, people are telling me that I'm crazy, like they were when I was talking about uranium. So maybe kind of give us the base case here for nickel and why you're so excited about this project.
Yeah, look, I think with nickel, it's got the nickname fickle nickel for a reason. You know, it ebbs and flows. You know, it's generally been a tough market. Nickel sulfide deposits like we've got at Jaguar are very hard to find. You know, companies could be looking 10 years for projects and still not actually be able to make a discovery in these areas. So it's, once you've actually got hold of a good asset, you really want to take that forward. But to the point around the market, the price has really come back in recent times because of all the Indonesian supply. And so there's been, I guess, a lot of talk, but that is sort of, I guess, coming with a lot of volume right now. And so what has historically been nickel pig iron or ferronickel operations in Indonesia, the Chinese-backed projects have actually now been able to take some of that material, convert it to matte, and then ultimately into nickel cathode, which can be delivered onto LME contracts. So that's you know, LME loves that because they're looking for more volume going into those markets. But in the short term, it's put, you know, an enormous amount of pressure on nickel prices. Why I like where we're at right now is it feels like it's pushed down. It's sort of hit 16,000 sort of back in that sort of December, January, February period. And it sort of hit headwinds then. The Australian market sort of had to switch off because they're higher cost. New Caledonia's had to switch off for a variety of reasons, cost being one of them, but obviously, you know, a bit more political unrest there. And so you're getting this stabilisation as, you know, the market naturally covers itself on the supply side. And, you know, what we've got left right now is a lot of still Indonesian supply. I don't see that's coming out of the market, but you do see that the cost profile across the globe actually means that, you know, prices are not really going to push much below where they are right now, in my view. You know, we've seen market commentators like Jim Lennon out of Macquarie Bank, you know, who's historically been quite bearish on the nickel price. Again, his sort of tone and sentiment has changed more recently, sort of sees a floor around these levels of $17,000 a tonne. And that's, you know, a function of those prices that have projects that have come offline, but also the costs in Indonesia sort of starting to creep up. So, you know, stockpiles of ore or prices that, you know, where it gets mined in Indonesia, those have gone up, processing costs have gone up. So I think you'll also see a natural pullback of just the rate of advance or the rate of rollout of new projects in Indonesia, which again will have this natural dampening effect, and we'll see prices be able to move forward. Roll that forward on the demand side of things, and we still really haven't seen the rollout of the full EV spectrum out of North America and Europe. Yes, there's been a lot of activity in through the Asian markets, but not so much in those other areas. And we still feel that nickel chemistry is a very big part of the battery makeup in those parts of the world. And I think as those gigafactories start to get rolled out, that supply has got to find a way to keep up. And basically prices have got to move to incentivise enough of that supply to be coming on stream. Where I feel like Centaurus has got a huge advantage is that with the recent feasibility study that we've put out, we've shown that we're going to be low cost, low operating cost. That allows us to compete with the Indonesians on a cost basis, but we've got a very clean footprint as from an environmental perspective. So really low emissions associated with being in Brazil. Brazil has most of its power coming from renewable sources, so there's a nice advantage to us, which ultimately will lead to hopefully partners wanting to get actively involved in the Jaguar project. Yeah. So it's a long-winded way of sort of saying, we feel like the cost profile is coming up in Indonesia. The demand side is going to also take off. Jaguar as a project is lining itself up for an end of 2027 type commissioning and first production. And that's, as it stands right now, where we feel like you'll see a significant uptick in the price. So, with an 18-year project life, we feel like we're in pretty good shape.
Yeah, okay. And what are some, basically, like, kind of give us the breakdown of what nickel is used for? Yeah,
look, I mean, historically it's been used in stainless steel.
That's 2/3 of it, right?
Yeah, correct, okay. And it probably still is about that level right now. But it's this evolution into the whole EV battery thematic. And yes, there's different battery chemistries. You've got LFP, but you've also got a lot of still NCM type chemistries, nickel, cobalt, manganese type chemistries going into batteries. So, you feel like it's a sector that's evolving. It's a sector that I can't sit here and directly say to you, it's going to be this or it's going to be that.
Yeah.
But having a right project that's got the framework together means that we can go forward as a project with a partner who is ultimately an end user looking to get that offtake.
Yeah, okay. Okay. All right, so as long as we still need stainless steel and we don't like metal to rust.
Yeah, look, I think the GDP side of the argument is there, and if GDP is increasing over time, you're going to see stainless, still uptick, but the real drive is still theoretically into the battery chemistries.
Into the batteries,
and I don't know whether that gets to 30-40% of the market, but you do feel like broadly that's it's a nice position to be in for nickel, because historically one market had to feed into that market. With the ebbs and flows of that market, nickel went up and down.
Yeah.
You've now got a competing market, a new reason for supply. So I feel really good about being in nickel, because you've got these dual purposes these days.
Yeah, yeah, and one that is likely to uptick in the future. Okay. Let's see, how are you going to make investors money in the next 12 to 24 months?
Yeah, good question. We're always trying to make them money. I guess we feel like we're coming off a relatively low base. I think the feasibility study numbers that we put out the other day, sort of about a week ago now, demonstrated these low costs, ultimately arrived at a net present value of about 650 million US dollars, so just shy of $1 billion Australian dollars post-tax MPV. Comparing that to the market cap of 225 million Aussie dollars. And it's unsustainable that gap stays so wide. I think where the missing piece is right now is us demonstrating to the market how we're going to fund the project. I guess getting in front of people and being quite clear that we are not intending to dilute shareholders at a corporate level at that sort of valuation. we're not against raising capital in the market. That's a natural path.
You're at the stage where you have to do that.
Yeah, we will have to do that in some form, but the natural path for us is to look for a partner that needs the product. And you're seeing that in lithium. Saw last week Liontown, did a deal with LG, 10-year money based on more supply and on that offtake side of things, and those sort of things where you've got a end user basically underwriting the funding is really the future, I think. So we've got unencumbered nickel rights with Jaguar. We bought the offtake rights off Vale probably a bit over 12 months ago. We did that deliberately and we only had to pay an increase in our royalty to them. There was no cash outlays at that point in time. But we did that deliberately so that we could have the offtake available to support the funding mechanisms that we wanted to put in place. We always thought that we wanted to be bringing in a partner to the project because we could get a better look-through valuation on the NPV of the project as opposed to what our market cap was telling us at that point in time. And that's certainly played out the way that it is. The pressure that came to bear in the market, I guess, earlier on in the year when this wave of Indonesian supply came in and everyone was feeling the pinch, mines were going on to those care and maintenance and shutting down, really took its toll even on Centaurus from a market cap point of view. And so it really says, okay, we need to find those end users. Now, we've had a lot of conversation around that. We're running a process with Standard Chartered Bank to find that partner for the project, and we would expect that look-through valuation is going to be much higher. So I can sit here and say to our shareholders that we'll fund it at that partnering level for the equity component. Once we've got that joint venture in place, then we'll look to fill the balance with some debt, but really trying to minimise the equity dilution at the corporate level. And I think fundamentally, if we can achieve that, get that funding piece in place, that's the maximum driver of value for shareholders in Centaurus over in the next 6 to 12 months.
Okay. Let's see. Give us the highlights. Okay, let's go into the feasibility study.
Yep.
So this is pretty much a straight up nickel play, right? Mm-hmm. You have some other metals in there, but they're not in quantities that you can capture or even have to worry about as far as having to remove them or something like arsenic or.
No, correct. It's quite a unique deposit. It's a hydrothermal type nickel deposit, different to like a big intrusive where you might have 60% nickel, 40% copper. In this situation, we're probably 95% plus nickel revenue. There's a little bit of copper, a little bit of cobalt, but in most months that we've seen in the profile through the mine plan, we're probably under payable levels for those things. So in some ways, that might be seen, it's a bit of a negative for us. It's sort of neutral because it means we don't have to optimise any of the process flows. We don't need to optimise the mine plan for these other elements. It's really just focus on the nickel.
Yeah.
So I think from that point of view, it's quite good and it's a very clean product.
Yeah. And your low electric bill in the feasibility study, it said that it costs 3.5 cents per kilowatt hour?
Yep. Correct.
Okay. I didn't know the cost of electricity went that low. So what type of, how are they doing this? Is this with, you said renewables?
Yeah, correct. So Brazil, for a long time, has based its national grid on hydro.
Okay.
Probably 65-70% of its power comes from hydro sources. On top of that, because of the size and scale of Jaguar, means that we can go into the open market for our power, and so we can go to renewable producers of whether it be wind or solar or whatever that's going to be, and substitute the rest of that balance, call it 20 to 30% of the additional power with renewable sources.
Okay.
All of that means that it's relatively cheap. The other thing that we've done deliberately here is that we're connecting to the 230 kV national grid. Some other companies might connect to the 138 kV lines that are running around Brazil. So we end up putting a little bit more capital in at the front end to access that, but that comes with much lower distribution charges.
Okay.
So it's partly that. You could probably look at most other projects in Brazil that are on the national grid, on the grid system. and they'll probably be around 5 cents a kilowatt hour, maybe 4.5 to 5 cents a kilowatt hour. But because of this 230 kV line, we were able to sort of bring that back a little bit. I think the other side of it is, which sort of gets forgotten about a little bit, is those sort of costs are still in Brazilian reais, and then you've got the currency factor. So, you know, when you convert from Brazilian reais back to US dollars, there's quite a favourable currency outcome.
Exchange rate.
Yeah, correct. So yes, that price per US cents per kilowatt hour could vary depending on what the exchange rates are. But we're not really seeing that it's going to sort of go completely out of control. And I think that's one of the key attributes of Jaguar when you look at the overall cost structure. Power is a big part of that, and most projects, I think if you looked at, would be relatively low cost in Brazil, whether it's gold or copper or anything like that. It's just a jurisdiction where you do have some of those advantages because of things like the power.
Okay. And what's the reliability there? So you've got, you said about 65% from hydro, and then the rest is made up in wind and solar?
Yeah.
Not
so much on the national grid, like we can get that.
Okay.
Yeah, at the moment, the national grid's probably 80% renewables, and then the rest of it's probably coming from gas.
Okay.
But because of where we have the size and scale as a project, we can sort of go and, instead of having to get that extra 20% from just the normal path, we can go to specific generators who are in the renewable space.
Okay.
They're putting that power into the network, and we're able to obviously draw upon that.
Okay.
So yeah, it's a very good place to be. It's not the reason we went to Brazil, but it's certainly an advantage that we're going to look to capitalise on.
Okay, feasibility study, it's only open pit, right?
Only open pit at the moment, yep. Plenty of underground opportunity in the future, but right now we wanted to keep it as simple as we possibly could.
Of course.
But it's really still demonstrated an 18-year project doing 18,500 tonnes of nickel a year, so it's still pretty substantial in its own right, just from the open pittable reserve that we've generated.
Okay, and that, I said possible catalyst of $4 billion worth of nickel after you excavate the open pit, then you've got the what will probably end up being underground later on.
Yeah, so we've already identified there's about 225,000 tonnes of contained nickel sitting immediately under the pits.
Okay.
So we know that that's already there. We've got to do a further resource upgrade in the next few months, and we had 50,000 metres of drilling in 2023 that hadn't gone into the resource bases yet. And most of that's in the deeper locations. So we've hit mineralisation at Jaguar down to 1,000 metres deep, remembering that we've hit mineralisation starting from only 5 metres below surface.
Okay.
So it's vertical, sub-vertical zones of mineralisation. We've hit it up here, and we've hit it sort of down at 1,000 metres deep.
Okay.
So we know that the system keeps going. Where the economics stop and stop you from going deeper and deeper, that's still to be determined. But quite confident that the 225,000 that we've already identified, sort of just sitting under the pits, we should be able to access at some point in time in the future. So we're not saying that's coming into the feasibility study.
And it doesn't need to, because that's so far down the road, but it's a possible catalyst for...
Yeah, I mean, look, I think in all realistic terms, the underground will probably come in somewhere in the open pit mine life.
Oh, okay.
But it's not in year 1, or probably not even in year 5.
Yeah.
But it's probably not also waiting till the end of year 18.
Yeah.
Like there'll be some point where there's
year 12 or something, you guys will start.
Yeah, you'll look at it. But I guess the point to investors is saying, it's not just about the open pit. It's not just about the economics that we've already defined, which are exceptional, but that there is still further upside that can come from the project. And I would expect Jaguar's producing in 30 years' time.
Yeah, okay. All right, and what type of tailings dam do you have, or is in plan?
Yep, so we've got what they call an integrated wasteland form, which is basically a wet tailings dam, but similar to what's been done in Australia for long periods of time now, where you actually have your dam and then you're sort of packing out the surrounds of that dam with your waste stockpiles.
Yeah.
So you've got really strong, I guess, boundaries to your dam. And at the end of that life of that dam, you take the waste, you sort of roll it all up on the top of your dam, you rehabilitate it all, grow your trees or do whatever you need to do. And so it's a very safe and secure structure.
Okay. All right.
And I think that importantly, the Environmental Agency, which has approved our environmental impact assessment, is very well aware of that structure because, we know being in Brazil, it's a very sensitive topic from what's happened in the past.
With Vale, yeah.
Yeah, with Vale. So, we're not going into it and trying to say, oh, we're doing something that shouldn't be done. The Environmental Agency has basically tailings approved that tailings dam to be in place.
Okay. And what's downstream of that tailings dam?
Yeah, we've put it in a position where there's really no plant or equipment, pretty much on the downstream side of all of the waste stockpiles.
Okay.
There is water courses down the stream, but it's, again, for the structure that we've got, we're not expecting that to be having any issues, but we have always been mindful of these criteria that have now been established for tailings dam builds and where they should be placed.
Okay. There's not a town right downstream of it? Okay.
No, we're fairly remote. Like we're probably 10 kilometres, I reckon, from the nearest village.
Okay.
The main town's about 40 kilometres further to the south.
Okay.
It's cattle grazing country. It's so it's farmland. Really, we've bought 3 pieces of the land there already, so there's no immediate population where we're located.
Okay. I've seen it on Google Maps, but I just want to kind of give the viewer a visual representation of nothing's going to get wiped out like all the videos that we've seen of.
Well, hopefully, I'm pretty confident we'll keep the structure intact in the first place.
Okay, you're not going to have to deal with that. Okay, social rents. What have you done for the locals?
A lot of things, really. One of the really unique attributes of the royalty system in Brazil is that 65% of the royalty that generates from the project goes straight back to the municipality where the project's located.
Oh, wow.
So it's not like the royalty goes into consolidated revenue and then you've got to fight to get it back into the regions. You've got a predetermined split where you get 65% going to the municipality, 25% to the state and 10% to the federal coffers. And so that structure alone brings along the communities and the municipalities where you operate with a mindset that is going to create a lot of jobs, and that in time there's obviously going to be a nice income generating asset that's going to flow through to those communities. That ultimately will lead to better services, but in the meantime we're still doing a lot of things. So main focus of attack has been waste management. We've done a lot in there. We've added a lot from the water quality perspective, and right now we're going through this program of training for construction work. So I think there's 1,500 positions that we've made available inside a actual training agency, if you like, called Senai. So they operate all through Brazil as a sort of higher level training institute. And so people apply, they come in, they pick the course that they want to be involved with, and then they get trained up on that to make them a little bit job ready coming into when we look to start the construction work. So those things have been going on. We've had, demonstration of that support through getting the environmental licence in place. So we had public hearings in the municipalities where we're located, and again got very strong, overwhelming support for the projects at that point in time. Okay,
that's good. Okay, in the feasibility study, you kept hitting on ESG, low carbon footprint. Is there money flowing into ESG? Is there money flowing into low carbon footprint? Is this, I'm not exactly, tell us about that. Why was that such a focus?
I guess if I step back 2 years ago, it was probably a bigger focus.
Okay.
It felt like if you wanted to generate funding, that you needed to have your ESG criteria lined up. And I think that is still the case.
Okay.
But it feels like in more recent times it's been flipped around a little bit about show me the economics first,
Yeah.
and then what's the ESG footprint second. Now, if I go and talk to a bank or I go and talk to a project partner, they might say differently. They might say, no, the ESG side of things is first and foremost. And I've got no problem with that, because we're doing everything that we need to be doing anyway. I think if you go back to when we started this, we were looking to go downstream. We were sort of looking to get into the sort of production of sulfate. And with that, I think came a lot more scrutiny around what does your overall footprint look like.
Okay.
As a concentrate project, and I just think, as I said, more with the passage of time, you're just seeing that it's an important attribute, but it's not generating green premiums at this point in the pricing cycle.
Okay.
So I guess back to the conversation we had about the market, where that's going, there's a lot of Indonesian supply. I think given the opportunity, users of the nickel product would prefer to diversify their supply away from Indonesia for a variety of reasons. One, just from diversity of supply.
Yeah.
But also, if you can come with product that does have a low carbon footprint, it's got good ESG credentials attaching to the overall project, then you're in effect hedging your ESG side of your nickel supply if you are still having to get some of your supply from Indonesia.
Okay.
So, and it's improving the way that it's going about things, but it's still coal-fired power.
Yeah.
And it's still got potential issues around depositing tailings into the sea, and these sort of things. So there is clear points of difference about having this nice ESG footprint associated with your project. I can't actually quantify it today to say, okay, I'm getting this premium on my product, but I suspect over time it comes to a lower cost of capital.
It can't hurt.
No, it's definitely not hurting.
Okay.
But as I said, maybe in my funding costs. So if I get some debt and the banks see that, then my funding cost relative to a project over here is going to be less.
Okay.
So,
I didn't know that banks paid attention to that.
I think you'll find that banks are probably paying more attention to that still more than anyone. I suspect the partners are looking to lock up their supply, and they want to know that you can do it at the lowest possible cost. And if you've got low emissions footprint, that's a bonus.
Okay.
But I think when it comes to actually funding debt with a bank, the banks will have more stringent criteria around what your emissions footprint looks like.
Okay. I guess I was a little afraid that Greta Thunberg had gotten to you guys or something, but that is not the case. Okay.
No. I think the other thing with us is that we want to capitalise on those opportunities as they're there.
Yeah.
But it's, as I said, it wasn't the reason we went to Brazil.
Okay.
We were already in Brazil, and it was just a natural flow-on benefit that we're able to access, rather than saying specifically, okay, I want to go into this country for this reason. It was more still always about where's the good projects. Yeah. And we're able obviously put our foot on a very good nickel project from Vale a few years back.
Yeah. Okay. We've been dancing around it. Cheap Indonesian nickel. I haven't been there. I haven't flown over it, but you can go on Google Maps and you can look at South Sulawesi, and like you said, their tailings are just going into the ocean. I think, and maybe I'm wrong, I'm just guessing, but I imagine the locals there can't be stoked with that. I got to believe that there's some point where the locals are trying to get the politicians to say, hey, can we clean this up a little bit? And maybe the mining companies are paying the politicians, and it becomes this game of who eventually wins. I don't know. But I imagine if the locals eventually win, that would be good for projects like Centaurus.
Yeah, look, I think if anything that's being done to, I guess, curb the rollout of further Indonesian supply is favourable for Centaurus. And in our mind, that is probably happening. There is probably, again, I've not been there myself, but just the noises that you hear around new environmental licenses, the rollout of new processing facilities. And I think that's partly coming from the environmental side, but it's also coming from the fact that, you know, costs are going up in those jurisdictions. The cost of mining ore has gone up, and so you get this sort of dual effect that there's a natural slowing of the rollout. So anything that's stopping supply coming on stream is clearly good for us. But yeah, I think that the Indonesian supply side of it has really been pushed by China. You know, China has put all the money in. I think to your point around, you know, the people and what do they want. Yeah. I think there's also probably groups there that are torn because, you know, what might have been, you know, a fishing village now is creating different forms of work, much higher salaries. You know, so there's, and when I say higher salaries relative to what they were used to.
What they're used to,
but still maybe not excessively high.
They went from $10 a day to 30.
Yeah, in a global context, that may still not be the case. So I think there'll be certain groups that are happy to have all of this new industry there. Yeah. But there'll be, you know, groups that clearly, eventually, the environmental impact and what it's doing on their surrounds will become paramount. Yeah, yeah. So I don't know whether the people there will have enough say to change the way that government approaches that whole thing, but it's a very big industry, and I think, you know, China's driving that more than anything else. Okay.
You got some serious tailwinds behind it.
Yeah.
Okay, we talked about SUDAM, SUDAM.
Yep.
That's the tax. I can't remember what the acronym stands for.
Yep.
But basically, that allows you to go from 34% taxes down to 15.
Yep. Correct.
That's correct.
Yep.
What's the risk there of that going away?
Very low in our mind. It's been there for a long period of time, and it seems to be rolling forward, and it's a strong incentive for new developments in remote regions. You know, this is the whole basis for it. Is that, you know, we'll give you a lower tax rate, you'll invest in a remote region. So if you look at us on a map, whilst we're in the Carajás Mineral Province, and there's a lot of infrastructure in that area, Vale principally put that together. Yeah. It's still 800, 900 kilometres from the coast. Yeah. It's rural farmland. There's not a lot of development there outside of what mining companies are doing. So to continue to encourage that to happen, you know, we would expect that these programs continue to roll forward. There's always a risk that, you know, things change over time, but we wouldn't expect that to be one of them. That seems to be a staple for the region, and something that you can very much rely on. Okay.
I saw that and I thought, wow, that could grenade the project, but you don't see that at all.
No, I wouldn't have thought so.
Okay. All righty. Let's see. Cause wants to know. So listener questions. Can Darren discuss the differences between the concentrate only and the integrated approaches? Will downstream processing follow later?
Yeah, so look, I guess we were originally on the path of downstream processing to produce nickel sulfide. It's still something we would like to do. We just got to be pragmatic to where our market cap is, how we're going to fund the project, you know, and so that, I guess, go back to February, March, whenever we made that decision to go as an initial concentrate-only project. It was really driven by the fact that, you know, the whole sector had been carted out, you know, market caps had been severely smashed. Yeah. And, you know, our board needed to be a little bit more pragmatic to what that funding envelope was going to look like and how we were going to actually get the project up and running. So we've made the call to do that. But if you look at Jaguar, it's 18 years in an open pit. As I said, it's probably a 30-year project. It is the sort of project that can avail itself to downstream processing. I think the question moving forward will be, what is that product that you end up taking into the downstream market? You know, as more of this Indonesian supply comes on, a lot of the end users are looking at MHP as opposed to sulfate. And so there's all of those sort of questions around what is the right product. And I suspect for us, it will be a little bit led by what the ultimate partner is in the project.
Yeah.
What products do they want? Where are they based? Are they looking to supply into the US and get IRA credits? Are they a free trade agreement country? All those sort of things will play into what that downstream looks like. And that's really part of the other part of the equation for us was, okay, well, we're making this decision. We're on the sulfate path. We've done it. We used our best judgment as to what that, why we wanted to be in that product. But until you've actually got the partner and you've tested it out with offtake, well, maybe that's not what they want.
Yeah, okay.
So we've just taken a more simplistic view, start with a concentrate, get that up and running, generate some cash, and then we can look to get into the downstream after that.
Prove the concept. You're not pigeonholing yourself, but
Yeah.
you can duck and move if you need to.
Yep.
Okay, and also he wants to know the drill program at Boy Novo. Am I
Yep.
saying that right? Boy
Yep.
Novo focuses on copper, gold. Is this a strategic decision to diversify their nickel exposure?
I guess it's building on our corporate purpose.
Okay.
So we're trying to build a strategic mineral business in Brazil, for the benefit of shareholders, communities, and everyone else that's involved in the project. We see Jaguar as being on a path already, and so now it's about, okay, well, what can we do next? We had this ground at Boy Novo. Whilst we were actively drilling Jaguar, it didn't make any sense to be drilling somewhere else on a much more grassroots type project. But now that Jaguar and the drilling's been completed and we've got a resource that's nearly 1 million tonnes and probably growing beyond that, we can make our geological team available to go off and do, fill the pipeline, if you like. So, start to look for the next projects that are going to fall in behind Jaguar and start to really build out our business. So not trying to be just a one-trick pony in the sense of, okay, I've got one commodity and one project, and we know what it's like. And for companies, those sort of situations are all more difficult. So if you can actually then get to a point, do some exploration and start to say, okay, well now the copper project's got some legs as well. So we've done a lot of early stage work. We've done the soils, we've done the geophysical type work. There's a lot of targets there. We're now got to run the truth serum over it. Put a drill holes into it and see what it looks like. There might be nothing. We might not find anything there, but I think Boy Novo is just an example of what we want to do with our business, in that we need to continue to be allocating some of our capital to exploration so that we can start to build out the pipeline. Now that might come from an acquisition as opposed to doing exploration on a tenement that we acquired, but all of those things just got to come into the mix. So Boy Novo for us is not so much about saying, I've got to be moving away from Jaguar, or it's certainly not trying to downplay the importance of Jaguar in any way. It's just about trying to say, we're trying to build out a business, and so it's what's next.
Okay. Not going to turn down copper and gold.
No, exactly.
If it's there.
If we can make a discovery there, we'll be very happy.
Yeah. Okay. Mike wants to know what's next and how will it be funded. You kind of hit on that a little bit. Maybe just brush over.
Yeah, I guess the next 6 to 9 months prior to final investment decision, probably the biggest piece of the puzzle there is the funding package. And I guess the key message is we're not going out to raise a whole bunch of equity at the corporate level and dilute our shareholders.
Yeah.
It's about keeping the capital structure as tight as we possibly can, going through this process with Standard Chartered Bank, talking to all the interested users for the offtake, and telling them that if you want that offtake, then you need to come in with a funding package. So we're looking to sell down a minority position in the project, somewhere hopefully between 25 and 40%. Still with us being operators, and if we can do that and bring a reasonable chunk of the overall project spend there, then we'll just we'll fulfill the rest with some debt.
Okay.
So look, I think for Mike, it's just really about, we are very conscious of capital structure. We're very conscious about where we see dilution being, and we want to do this in the best possible way. And as I touched upon earlier, there's this big gap right now between market cap and our value. We would like to see our share price come up and close that gap, but if we can do the right deal with a partner, then we should get a much better look through to the valuation point of view as opposed to where our price is.
Yes. Okay. Also, I noticed that you guys, the land you have, you've got all the land. You're still negotiating a little bit with one last. He sounds like a holdout. I don't know. Tell us about the last bit of land that you need to get for the project.
Yeah, it's an interesting one. We don't need to get it.
Okay.
So again, mining rights in Brazil take preference over like farming. So we can go through more court-generated processes if we want to.
Okay.
We will eventually have a mining easement over, so I don't know, maybe in the US and Canada it's sort of like a right-of-way, if you like, or those sort of concepts, which would come with compensation. The court would still pay compensation, but the landowner here is just the price that he wanted for his land, we weren't prepared to pay. Most of the other deals, we did 3 other deals probably 3 years ago.
Okay.
Sensible prices, farmers were happy, they moved on with life.
Okay.
You've got, you can call it a holdout, it certainly is a holdout.
Okay.
But we were in no rush to try to do anything with it because we don't have to.
Okay.
It's a nice to have.
Yeah.
If we can pick that up, obviously, clears a few headaches for us, but broadly speaking, we're not feeling concerned about it.
Okay. Yeah, the eminent domain or right of way, something like that. Yeah.
Yeah.
How big is that land that that farmer's got?
Whoa, I think it's about, I'm guessing about 200 hectares. I don't know what's that in acres. I don't know to do the conversion.
I think it's double.
Yeah.
I don't know.
Yeah.
I don't want to look like an idiot in front of the camera. I don't know. 200 acres. Google it.
Hectares.
Yeah, hectares.
Yeah.
Okay. What's the biggest unanswered question surrounding Centaurus?
I think it's still the funding piece.
Okay.
I think it's very easy for a company to put out a feasibility study, and then what that does is crystallizes the capital cost and effectively the funding requirement. And if you haven't got a clear answer to how you're going to do that, then you're at serious risk of your price being sold off. I think coming out of the feasibility study that we've put out, we haven't been sold off. I think the message is getting through that we're not going to dilute our shareholders. It's not that we have to be so aggressive to do it that way. The market is going to turn. I honestly believe the nickel price is going to push forward. Centaurus has huge leverage to that nickel price moving up, as you can sort of see just in the economics. So I still think the biggest question that people have is, okay, show me that funding piece. If you've got that funding piece, then I think you can really get a nice leg up in the share price. So to your point earlier, what's going to drive it? I still think that's probably the biggest piece of the puzzle. We got things like the second stage of the environmental approval process. We've got the mining lease that we still want to get, but we're very comfortable with that. We're not expecting any headaches out of that. That's just a process-driven thing. We'll only make the investment decision once we've got the funding, the environmental licenses and the mining lease. So, shareholders shouldn't be concerned that, we're going to go off and do anything too aggressive until we've actually got all of those ducks lined up. Okay.
And what could go wrong?
Tough one. You've always got left field NGOs or whatever coming out of the woodwork. Haven't seen any of that. As I said, we touched upon the community support for this, the royalties that are going to flow to the region. They are big drivers for the municipalities to help smooth the path for us to get into production. Obviously nickel price, if it got completely carted out, okay, well then that's a problem. But I think with that, there's two things. One, I don't think it's going to happen because I already feel like we're at the cost point. You look at where we sit on the cost curve, we're in the bottom quartile. If our project is not getting up, there is no nickel projects getting up.
Yeah.
So if you look, and I'm not just talking about in Australia, I'm talking
worldwide.
Worldwide. This is one of the best undeveloped nickel sulfide projects. It will get up because of what its cost structure is going to be. So if nickel pulls back further, you get something happening, nickel getting shorted, or for whatever reason, that's more of a timing driven thing because eventually that can't be sustained. Maybe, I don't know. So,
black swan somewhere. Huh?
Yeah, just, there's so much going on globally right now. If something crazy happens, okay, but that's every project.
Yeah.
So it's not something specific to us or the nickel project. We've put a fair bit of time and energy into thinking about risks and where it could go, and we try to mitigate that as best we can, and we sort of feel like we're doing that.
Yeah. I think that the timing of your project is pretty cool because if as Indonesian nickel, if they stop destroying that landscape for whatever reason, and some of those mines come offline, you're at a very unique time in this. I like that the nickel price is probably, I mean, I'm a technical analyst guy on the charts, and when I look at what the nickel price is doing, it just doesn't look like it can go much lower to me. Fundamentally the same. I think your timing of this, and as far as getting everything into production, you're hoping about 2 years, something like that?
Yeah, we should be able to build in 2 years once we make that investment decision.
Mm-hmm.
We've seen practically a project very similar to ours being built by Aero Copper,
mm-hmm.
about 40 kilometres away. That's a 4 million tonne per annum copper float plant. We're doing a 3.5 million tonne nickel float plant.
Yeah.
It's pretty much the same thing. They moved, I think, the first dirt in September 22, and they're already producing their first con. So, it gives us a lot of confidence that you can take this cookie cutter approach, replicate what they've done in that part of the world, and do it over here. So, to your point, it should be a project once we're up and running that gets us to first concentrates in the back half of 2027, and that should, all things being equal, be at the point in time where you're starting to see a really strong uptick in the nickel environment.
Okay, all righty. Well, thank you very much. How can people get in contact with you if they want to learn more?
Yeah, so look, I guess the best way to do that is through the webpage initially. My email is darren.gordon@centaurus.com.au, webpage centaurus.com.au. It's obviously on the webpage, it's got all of our office details there. Or follow us on LinkedIn and the like.
Okay.
So plenty of forums to keep hold of us. But this should be a pretty busy period of time. And I really do feel confident that we start to close this gap between price and value. You just need a little bit of positive sentiment around nickel, and we should be really, really well exposed to that.
Yeah, I like moments like this. It reminds me so much of uranium a couple of years ago, and I think a couple of years from now, you and I will be talking, and it will be a very different story.
Yeah, thank you. No, I agree.
Well, Darren, thank you very
good.
much, and I appreciate you coming on the show. I wish you the best of luck.
Thanks
we are
very much,
literally
Steve.
betting on it. And thank you for tuning in. Support the show and hit the like and subscribe, and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.